To understand the market means to stop guessing, stop rushing, and start seeing how different instruments move, react, and form their own unique patterns. Many beginners look at charts as pure chaos, even though every asset has its own logic, its own character, and predictable behavioral traits. And once you know them, the quality of your trading changes instantly. In this video, I'll break down 5 instruments in detail, explain their temperament, how they react to levels, typical traps, and how they behave in real market conditions. Watch till the end. Understanding the character of an asset is often more valuable than any technical indicator. Today, we'll look at 5 instruments that appear often in trading and are perfect for studying market behavior. Australian dollar USD. This is one of the most alive and temperamental currency pairs. Its movements are rarely random. It almost always reacts to commodity markets, especially the dynamics of gold and iron ore. On short time frames, the pair loves sharp spikes that look like fake reversals, but in reality are just its normal behavior. Its strong side is the consistent tendency to return to average values. If you see a strong spike up or down, don't rush to assume it's the start of a powerful trend. Most of the time, Australian dollar USD comes back to balance. Because of that, it's often used for pullback scenarios. You wait for the spike, wait for the confirmation, and then take the opposite direction. The main rule is not to enter the first impulse, but to wait until the market shows that it's overheated. But before we continue, a quick reminder about the free club I created for those who want to go systematically. There you'll find setups, execution results from me and subscribers, detailed material and psychological preparation for trading, and an interactive deposit management table based on the martingale principle. You enter your amount, the table calculates a sequence of steps and helps you stay in control even on difficult days. All materials are free but updated regularly, so it's better to grab them now. The link is in the description under this video. Now, let's get to the point. GBP USD. This is an emotional pair that's not an exaggeration. The British pound historically reacts to news more strongly than most instruments. GDP reports, comments from the Bank of England, even political statements can move the chart by dozens of pips. Its behavior looks like a chain of sharp fluctuations, smooth movements, sudden spikes, smoothness again, and on in the cycle. But despite all the unpredictability, it reacts to levels extremely well. If you see a key support or resistance zone, the pound often respects it clearly without any hesitation. Another feature is deep corrections before the trend continues. That is, if the price is rising, it can easily make a strong pullback candle, check out the impatient traders, and only then continue moving. USD JPY. This pair is a mix of stability and suddenness. Most of the time, it moves logically, smoothly, and in trend, especially during calm market periods. It's like long, consistent candles that gradually build the movement. But the key feature of the USD JPY is its sensitivity to global market conditions. Any escalations, talk about risks, unexpected news, and the yen will strengthen, creating sharp moves. That's why this pair is perfect for those who like trend analysis but are ready for spikes triggered by global events. Canadian dollar JPY. This pair is interesting because it combines the commodity nature of the Canadian dollar and the safe haven behavior of the yen. The result is an asset that loves stable, long-lasting trends. If CAD JPY starts moving in a direction, it often keeps going for quite a while. Smoothness is the key characteristic of this pair. It rarely makes false breakouts and rarely reverses sharply without some kind of warning candles beforehand. A long smooth rise, a short correction, and continuation in the same direction. That's why it's convenient for starting trend trading. But it's important to remember, oil-related news can shift the dynamics in either direction. XAU USD. Gold is its own universe. It's an instrument that almost always reacts to global events. Tension, geopolitics, inflation reports, Fed decisions, but during the day, gold lives by its own rules. It has clear rhythm, tight ranges, sudden impulse, a series of strong candles, a new pause. You see, gold loves false breakouts. It can break a level, take out the stops of everyone who placed them too close, and only then show the real direction. At the same time, if gold picks up a trend, It moves powerfully, quickly, and almost without any pullback. It's an asset you need to study calmly, without rushing, and always with the context of the day in mind. But gold gives you the best understanding of market logic, where the crowd is rushing and where the big players are acting thoughtfully. If you want me to break down other assets, cryptocurrencies, indices, exotic pairs, write about it in the comments and I'll make a second part. And now some good news. If you want to see live trading, real intraday breakdowns, ready-made setups, strategies and settings, you can join me in real time. I host trading sessions where I explain the logic behind each decision and show real price development scenarios. To get access, just message me. The contact is in the description under the video. And make sure to subscribe to the channel so you don't miss the next episodes. Here you'll find a systematic approach, market logic and detailed breakdowns that help you stop guessing the movement and start understanding why the price behaves the way it does.